What's up, everybody? Welcome back to another Bull Room episode, okay? This is episode what? Number 3, AZ?
I believe so.
Oh, wow. We're already 3 in. Ain't that crazy? Well, look. On this series of Light and Wealth Club, we talk about, investments. We've been talking about stocks. We've kind of been giving you the little game, you know what I'm saying? Blazing you up on stocks. But look, check this out. Today, we're going to talk about two businesses, companies in particular. We'll be talking about Target and Anheuser-Busch. I'm not sure if I said that correctly. Did I say that correctly?
I believe so, yeah.
Okay. But yeah, we're gonna be talking about those things. And this is your host MP and behind the scenes.
AZ.
And like I said, we're gonna be talking about those two things. Almost forgot the intro there. Almost forgot. And we're gonna talk about how bad news is actually an opportunity. How bad publicity for a company is sometimes a way to get rich, a way to make some money, a way to make some extra profit, for your brokerage account. So today, as you guys know, in this day and age, we have a very, I wouldn't say problem, but we have this agenda being pushed on the whole population. Nothing against, our any members or any people out there that play for the other team. Nothing against you guys. I respect you guys, just that I don't believe in your agenda. The LGBTQ agenda being pushed on everything is kind of just out of hand, I believe, in my own opinion. Not sure what AZ has to say about that, but, in my opinion, I just think it's kind of out of hand. Pushing it on everybody. Look, I don't care what you do in your bed. I don't care, and I don't want to know, okay? But with that being said, right, we got these two companies that made some business mistakes, and it cost them 15% of their stock to plummet in just 1 month. And both of them are over 15%, not just one of them, okay? So we're going to talk about Target first of all, okay? Target, I low-key can't imagine life without Target. I kind of put myself in a position where, okay, what if I boycott Target, right? Where would I go? There's no really real other option. Because Target is like one of those stores, kind of like a Walmart. It's like a middle-class Walmart in a sense. And it's like, it's one of those where it's like, it's so convenient. How could you not go there?
Yeah.
You know what I'm saying? But, that's something that kind of like, I was like, well, if I were to boycott this, right? Not that I was, but what I'm saying is if I were to, where would I go, right? That was a question I was asking myself. And low key, bro, they're in their industry, they're pretty dominant. I came to realize that, asking myself that. Would you agree, AZ?
Yeah, no, it's like you said, if the only other people there that might be in that area is Walmart.
Yeah.
But then Walmart isn't really, in the same level as Target.
Exactly.
Target is a little bit more higher end.
A little bit more higher.
Yeah.
You find a lot more things there,
Yeah.
right?
It's not Gucci. It's not
Gucci, no.
No.
But, it's crazy, though, the dominance that they had, because they even had me like, there's no other store than Target, really.
Yeah.
But check this out, right? So in 1 month, they're down 15.77% due to this LGBTQ agenda. Year to date, they're down 13.56%. So technically, what they dropped this month, there goes their year, dude. Their little mistake of pushing this agenda, their year just went shit hit the fan, because of this agenda that they're trying to push. And since 2020, they actually increased in price, okay? So since the beginning of COVID, right? So this is from December 27th, 2019. Their price was $129.21, okay? June 1st, right, today, they're sitting at $131.16. You might be like, well, then that means that they did pretty decent on during COVID, during these recession fears, during the LGBTQ agenda, if they're still up since the beginning of 2020. Not really, because in September of 2021, they were at $246.67. Okay, so yes, they had a really good COVID year. I'm guessing the recession fears came and they dropped, right? And then now with this LGBTQ agenda shit, they dropped even more in just 1 month, and that just affected the whole year, the whole year's stock performance. Okay. Now let's move on to Bud Light, okay? Because in reality, it's just Bud Light. But Anheuser-Busch, I'm not sure, like I said, I'm not sure if I'm saying that correctly, but they own multiple companies like Budweiser, Corona, Stella, and Ultra, just to name a few, okay? So in reality, yes, Bud Light can mess up. Those sales could go down, but if they're making other beer sales like from Corona, they can make that up, right? But the thing is people are so smart, so they're gonna know what sister brands they have, right? But let's talk about Bud Light. Okay, I'm gonna just call it Bud Light because it's ticker symbol Bud, right? Yeah. 1 month they're down 15.49%. Year to date they're down 9.71%. So this 1 month did affect their 1 year. Okay, since 2020, in January 3rd of 2020, they were at $82.75, and today, June 1st, they're at $53.81. So they obviously have not, had a good year these past 3 years. Yeah. They've been suffering throughout the recession fears, throughout COVID-19, and obviously now the LGBTQ agenda. Okay, so why do I believe these two companies, even though they messed up right this month and have had a bad month, have had a bad year, why do I believe these are potential great opportunities? And I'm going to tell you today, okay? So Target, believe it or not, we talked about dividend stocks, right? You guys that watch the Will Room should remember what we talked about in dividend stocks, okay? Target pays a 3.29% dividend yield. Not bad. Not bad at all. And they're suffering right now. They're down right now. They're sitting at 131, and back in 2021 they were at almost 250.
Some potential value there.
That's some potential value right there. That looks like a buy and a hold. Collect the dividend, reinvest the dividend while they're still down. And as soon as 2025, 2026 rolls around, and let's say the economy boosts back up, and there's other problems in the world that we don't need to worry about the LGBTQ stuff, we don't need to worry about COVID, we don't need to worry about recession, we're probably going to be sitting around the $200 again. Maybe even $300 if everything, boosts back up. Because you got to remember, the stock market is simple. Supply and demand. When there's people that have extra money to invest, they're going to throw it into the stock market, causing more stocks to go up. Right now, money's kind of scarce. So these prices are sitting really low. So if you got some extra money and you throw it in here, you're going to make a great profit in the next 3 to 5 years. This is not financial advice, though. Let me make that clear, okay? These are just personal experiences and opinions, and we're just trying to do this for entertainment purposes only. I want to say that before I get sued. But yeah. Now, on the Bud Light situation, Anheuser-Busch, they pay a 1.53% dividend. That's kind of low, but if you tell me, it's better than nothing. Okay? You got something to say, AZ?
No, yeah, you're right. Especially because, there could be some potential value with them as well, especially with what's going on with them. But honestly, I'm looking at their chart, bro, and it seems like even them before they were not doing too well. Mm-hmm. I'm looking at the weekly.
Of course. I would say go to the 3 months if you can see the quarter.
Yeah, yeah. But even just on here, I can see that
they were already suffering. But but obviously, it takes more of a plummet due to the the consumer reactions. Because I'm not gonna lie, bro, you do go to stores and you do see a lot of Bud Light.
Oh yeah.
I mean, you see that people are boycotting Bud Light. It is not hidden. It is not something where you're like, oh, well, it's not happening here in California, because it is happening even here, mm-hmm. Right? I just think, look, when companies make mistakes like this, and it's a company like Bud Light or Target that have been around since before I was even born, I think it would be stupid not to buy these companies. I think it would be dumb not to see the opportunity and the value in these companies during their short-term, mistakes. Because I actually made some money. I'm going to talk now from experience off a mistake like this with Nike. At the time, they were going to come out with a 13 colonies shoe, and Colin Kaepernick said it was racist. That guy obviously doesn't know his history, because if you know anything about the 13 colonies, slavery was still not even in existence. It was just the 13 colonies. North and South wasn't even invented. It wasn't even a thing. So, Colin Kaepernick, hey, bud, maybe you should hit the books again, okay? But with that being said, he stopped that shoe from being released, okay? causing Nike to go down. This was back in 2018. I was in high school. I had just started my stock trading career, pretty much, and they obviously they never came out with the shoe. The Nike stock took a pretty decent hit, like 10%, because of the reactions, right? Because people were saying, how are you siding with him? It's a 13 colonies. It's not a Southern Confederate thing. It's not nothing. What the heck? That's just American history. It's nothing having to do with slavery. I would understand if it had something to do with slavery, but it doesn't, right? So the stock took a hit. I remember I was like, oh, wow. Because it was at the time, it was like in the 70s. It went down to like the high 60s. I bought some. And I swear to you, 2-3 weeks later, came back up, rebound, because everyone forgot about it. It was one of those really short-term news things, bad news. Came back up, went back to like 74. I made a quick little profit. So bad news sometimes is a great thing. It's a great opportunity. And like I said, mainly when it comes to companies that have been around longer than I have been around. AZ, do you have any thoughts about bad news being opportunities? Have you ever done that? Have you ever used that strategy before?
That's my only strategy. Anything in my portfolio right now is only companies that have been knocked down pretty bad. I have some relatively no, man. So
you look for bad news.
It's not that I look for bad news, but okay. So yeah, like I would say my only one that's probably Apple. But I did pick up Apple at let me see here.
What's your average cost?
$128.
And what is it sitting right now?
$180.
Oh wow, yeah, that's a $60 profit.
Yeah, so Apple was the only one where honestly that was just kind of even that was kind of going to the highs. But
now I don't know how many shares you have, but whatever shares you have plus times 60.
Yeah, I have 10 shares.
10 shares? Yeah. So that's a $600 profit you made.
There, yeah, bro. Mm-hmm.
You see, but why'd you buy it at 120? Was there some type of news? Did you see something?
No, man. It was just Apple. I bought it.
You just bought it just to buy it?
That was kind of when I first kind of started getting started. When I first started buying stocks, and Apple was just kind of like, I own an iPhone. Everybody owns an iPhone, and they're going to be around for a really long time.
Okay.
So that was my own thing with that. But yeah, man, everything else.
But have you ever bought something because of bad news?
Oh, specifically because
like
of
something
bad
like
news.
This, where it's like they just made a little quick mistake, and they're going to rebound.
No, probably not full. Probably options.
Okay.
Yeah. Options, yeah.
Oh, you'll do options trading when it comes to that.
But okay. I won't really hold shares.
But that's a lot more riskier, right? Let's make sure we...
sure, yeah. And also depends how much, because I always...
The viewers know this.
Yeah.
It's very risky. Options trading is very risky.
Oh, yeah. If you're just starting with options, I think it's something you should look into, but I wouldn't spend no more than $200 a trade.
I wouldn't do it. You guys will learn later on, right? You guys will learn later on why I don't want to ever do that again.
Oh, I got you.
You know why, easy.
Oh, yeah.
But anyways, guys... like I said, I did it with Nike, and I also did it with Penn. Penn is actually a gambling thing. You know Penn, right? You've heard of Penn?
I don't know. What is Penn?
It's pretty much they do online gambling. They pretty much just bought Barstool.
Oh, okay.
They own Barstool now. Okay.
Are they? Can you trade them?
Yeah. Really? Look it up. Really? Ticker symbol PENN. But with that being said, though, during COVID, bro, they went down to $4. I bought it, bro. Like an idiot. Sold it at $7.
Dude, that was me with Meta.
Time out. Do you want to know do you know what it ran up to? Because it was sitting at like 40, right?
Yeah.
40, like 50, 40s.
Yeah,
and it went down.
I can see it.
It went down to $4. I bought some. It went up to $7. Obviously, dude, it's COVID. I didn't.
Yeah,
you weren't. You know what I'm saying? You can't predict the future.
Exactly.
So I bought it, sold it. I was like, cool, quick profit, dude. A month later, it was sitting at $77.
Damn, dude.
And then it ran up, I believe, past 100 after that.
Yeah, I'm looking at the high was 137.
And it's sitting at $20 now.
Right now, it came all the way down to 24.
But that has to do with recession fears and obviously, well, not LGBTQ agenda.
I wonder how DraftKings is doing.
Oh, check them out. Compared
to them, $24.
Oh, same price?
Same thing.
So look, but look, I would say one thing, right? A lot of stocks right now are suffering because of three main things. It's going to be recession fears. It's going to be still COVID-19, having still not recovered from the pandemic. And then some obvious mistakes like the LGBTQ agenda being pushed. A lot of people are not liking it. A lot of people have very hard feelings against it. So there's going to be a lot of boycotting. There's going to be a lot of people not buying from those businesses right now because of that type of agenda that they might disagree with, or might just be like, we don't really care. We respect it, but we don't care. All right. AZ, what you got to say, bro?
I think you covered it all. Target
for sure is a buy in my eyes, bro. Target, you could probably pass up on the Bud Light. You know what I'm saying?
I would definitely pass on the Bud Light. I don't think that's a really good trade, to be honest.
It's not a good trade, but it's gonna recover.
I don't think so, bro.
In a good economy, it'll recover.
It could, but not to where you're hoping. I think you could put your money.
I'm not hoping for 100% return. I'm just saying you could buy it at 53 and sell it at 60.
See, I think that's where options are great.
Well, yeah, I could see the reason why
you can get a leap, for a year or something like that.
I can see why you would say that, but all I'm saying, bro, is like there's short-term turmoil.
Yeah.
Right. Mm-hmm. Let's say at the end of the year we have some good news, right? Mm-hmm. And you bought it at 53 and you sold it at 60. It's That's it's a cool little profit.
Yeah, yeah.
Right? Like I said, these are just investment opportunities, right?
Yeah,
take it or leave it, right?
Yeah, of course.
But for me, if I had to pick from the two, and I think AZ could agree, Target.
Absolutely. I think it's just based on how much money they're making, based off their earnings, based off their debt to income ratio.
Not only that, but the dividend yield is pretty juicy.
It's okay.
The sweet spot is 3 to 6%.
Yeah, it is. Yeah,
that's the sweet spot.
That's the nice part. Yeah, I wish it was close. If it was like
it was like 4 or 5,
yeah, that would be like, all right, that would be great. But if you have a big account and you could spend, let's say, $10K on Target.
Well, not only that, but like check this out, right? It's sitting at 129. Mm-hmm. All-time high. Well, not all-time high, but close to all-time high is close to 250. If it hits 300 on a good economy, you're making 100% return.
Yeah.
That is amazing.
Mm-hmm. I'll be honest. For me, for me to pick it up for my long term, I would probably want it closer to 120.
For your long term, bro, you can't be picky when there's short term turmoil like this, though. You got to take it as it comes.
Yeah,
you got best solution would be dollar cost averaging. You know what? We've never mentioned dollar cost averaging.
That's true.
You know what? We're gonna talk about that. What is it? Dollar cost averaging, AZ?
When you are purchasing, so let's say you buy, let's say right now, right? You had bought Target at 175.
Okay.
Target came down to 129. You rebuy, but it has to be bigger than your initial amount that you bought at 175, and that would be dollar cost averaging because you're buying at a lower price, so your average comes down. So
you're on the right path.
Yeah,
but I wanted to correct you on where you said where you buy it more than what you initially started with. Mm-hmm. It doesn't necessarily mean that. Dollar cost averaging could mean easily like you're buying $5 worth of that stock every day. So as it comes down, as the knife is falling, you're buying a little. You're just dollar cost averaging in. You're you know how, for example, you said 175 would be your average cost.
Yeah.
So you want to lower your average cost. So that's essentially why dollar cost averaging is so important. You want to lower that average, so when it comes back up, you make that difference.
So the way I learned it was that the amount has to be bigger than what your initial.
No, the amount doesn't. It could literally be the same amount every time. You're just buying it each and every time at a lower and lower and lower price.
Gotcha.
You could even dollar cost average up.
You could.
That's such thing because there's sometimes where there's higher lows, right? And we'll talk about that later. But yeah, dollar cost averaging on this part would probably be the best thing. Maybe if you know, like I said, not financial advice, but if you could allocate a percentage of your check into investments, hey, go for it. That's something I did. That's something I'm pretty sure AZ does, and that's just our personal opinion. But yeah, dude. I mean, I just think that these type of things, bro, just open opportunities. It's cool for a quick little profit, and maybe 6 months from now, because you know what? Let's hold ourselves accountable. And 6 months from now, whatever that is, AZ will hold me accountable to this. We're gonna talk about these two stocks again, and we'll see where they're at. Okay. So right now Target sitting on 129. Bud Light sitting at $82. Whatever they're at in 6 months, right? Let's say we're gonna pretend like we bought one share of each. Okay. Our average cost for Bud Light is $82.75. Our average cost for Target is $129.21. Okay, that's our average cost. We're gonna check in 6 months. Okay, just so you know what I'm. If you don't believe us on this bad news opportunities, we're gonna hold ourselves accountable. So with that being said, this is the end of the video. Just to show you that bad news equals opportunity. That's what we believe. And, stuff like this is what's going to make you quick little profits, quick little extra cash, quick little more capital for your business or whatever it may be, okay? So we'll see you on the next one. All money in, no money out. Stay dedicated, stay motivated. And you know what, AZ? Play the outro.
Vaya, folclórico. Oye, disculpa la tardanza y los dolores de cabeza, ¿sabes? Agradezco tu paciencia y esta gran oportunidad. Dile. Ya tú ves.